People get burned, they get hurt, they blow their accounts up, and they never come back because the stock market is a scam. Now, if you bought this yesterday and made some serious cash and got out, great trade. Amazing trade. You absolutely killed it. What's up, everybody? What a crazy week it's been so far. We're going to get right into it, so buckle up, hit that like button, and hold on to your butts. First, here's Kodak. And I mean, what else can you say about this other than what the f***? The stock has ran from $2 a share as of Monday's close and then went parabolic today, flying to $60 a share. It was an insane move, but also a freaking haltosaurus. The stock halted trading due to volatility 10 times before reaching its high of the day, and then it plunged 50% from there as of this recording. So why did it happen, and is it too late to buy up into this monster stock? Well, late yesterday after market close, President Donald Trump unveiled a deal for Kodak, which now makes print and advanced materials and chemicals to produce ingredients for drugs to treat the Rona. The president made a statement about Kodak directly saying, quote, "Our 33rd use of the Defense Production Act will mobilize Kodak to make generic active pharmaceutical ingredients. We will bring back our jobs and we will make America the world's premier medical manufacturer and supplier." Earlier that day, the Wall Street Journal reported that the U.S. International Development Finance Corps is lending $765 million to Kodak under the Defense Production Act and hopes to curb U.S. dependence on drugs made overseas. With that loan, Kodak will make ingredients for generic drugs, including the anti-malarial drug hydroxychloroquine. That's the drug that Trump touts and took as treatment for the Rona. Now, the Food and Drug Administration, or the FDA, in mid-June revoked its emergency use authorization for the drug to treat the Rona because, well, it doesn't work. Kodak did come out with a statement saying it will be making ingredients for essential drugs for which the FDA says they are in short supply of nationally. So they are making more than just the anti-malaria drug, but I'm willing to bet that a good chunk of that $750 million is going to be largely focused on that. So, is it a buy now that it's gone up $3,000 in the last 24 hours? I mean, I can't even say that with a straight face. I mean, if you think buying a company with a $111 million loss last year that was once a failing camera company that could not figure out how to go digital and now all of a sudden decided to go into the pharmaceutical industry and was just awarded $750 million to blow on a drug that is said to work for the Rona but really doesn't work for the Rona, then sure, why not? What could go wrong? In all seriousness, guys, let's think this through. When we look at stocks like this that go straight up like this, what usually happens? People get burned, they get hurt, they blow their accounts up, and they never come back because the stock market is a scam. Now, if you bought this yesterday and made some serious cash and got out, great trade. Amazing trade. You absolutely killed it. Hey, Steve, can we get a hell yeah for these guys?
Hell yeah!
Thanks, man. But if you're getting into your feelings about some Kodak and choose to be married to this thing, then I don't think I can help you. This won't end well, people, and it's going to be a long road for Kodak, even if they produce anything at all. The company has gone without an identity for so long and was once on the Dow, if you can believe that. But in my opinion, there's no real revival for this thing. Can you imagine them getting a loan like this from the government and then posting an offering on this insane run-up? Scandalous. But it happens all the time. Let me know your thoughts in the comments, though. Do you think this is a fresh new beginning for Kodak and this is the start of their new identity? Or do you think this is just another classic pump and dump that we've seen 50,000 bazillion jillion times? But enough of Kodak. Let's talk about Tesla and a critic that said that Tesla's valuation is mind-boggling. Tony Sacconaghi, an analyst from financial firm Bernstein, stated that despite our relatively bullish stance on electric vehicle evolution, we find it difficult to justify Tesla's current valuation under our most bullish imaginative scenarios. Oy, have we not heard this before? He and his team downgraded the EV maker stock to underperform, maintaining a price target of $900, which is well below what it's trading at as of this recording, right around $1,500. The analyst wrote, "We understand the bull case, including the possibility that margins could improve materially and the fact that Tesla is a leader in a huge underpenetrated market." And then he went on to say, Tesla's current valuation is mind-boggling. The analysts over there highlighted Tesla's enterprise value that reached that of Toyota and Volkswagen combined, which made it the 13th largest cap company in the world. That is unprecedented for a large cap stock outside of the tech bubble. Tony. It's not just a car company, bro. This is where analysts always seem to stick their foot in their mouths. It's time to stop comparing Tesla to other car companies such as Toyota and BMW and compare them to companies such as Apple. because in my opinion, it's more of an apples to apples comparison. Get it? Tesla is so much more than cars. Right on their website, it stated that the very purpose of Tesla's existence is to accelerate the world's transition to sustainable energy. Was there anything about building cars in that statement? No, there wasn't. They are focused on energy and automated technology, and honestly, current valuations don't matter with Tesla, as crazy as that seems. Most investors are looking into what Elon and Tesla have proven up to this point and how they've just willed things into existence. And so when Elon mentions how they plan to make full autonomous vehicles and turn them into robo-taxis, the investors now listen. When Tesla announces that they're providing $1.49 per watt on their solar panels, which boasts that it is the cheapest in America or your money back, investors listen. When rumors start going around about how Battery Day is set to change the game even more and take this industry to the next level, investors listen. It's not about what's going on this second with Tesla. It's about what's happening in the future with Tesla. And I mean, after all, isn't that what the stock market is anyway? A forward-looking vessel? Not only all of that, but Elon has recently been outspoken about his desire actually to not crush his competitors and is now open to licensing its self-driving software and battery technology to anyone who'd be willing to take him up on it. Competitors have been pretty transparent about the technological head start that Tesla's had, with one Volkswagen executive stating that Tesla has a 10-year jump on rivals according to Reuters. Audi's new CEO Markus Duesmann also told Reuters that Tesla has at least a 2-year advantage in terms of computing and software architecture and in autonomous driving as well. So I guess if you wanted to compare it with other automakers, you can, but Tesla's competition is even conceding here. Elon tweeted out yesterday and saying, quote, "We're just trying to accelerate sustainable energy, not crush competitors." Elon's comments came in response to a blog post about German automakers looking to close the technological gap between them and Tesla, and Elon is actually welcoming it. Analysts and people who don't understand Tesla's mission really don't comprehend what they're trying to do. When you think of Tesla as Elon's passion project rather than a billionaire who's just trying to make more money, it gives a real perspective here. It's not the money that motivates Elon, in my opinion. It's his desire to accelerate the world's transition to sustainable energy. Look, Tesla, as if it wasn't apparent already, is a buy in my opinion. Yes, even now at $1,500 since its pullback from those sensational earnings last week. My bullish case for this by the end of the year is $2,250, and I think it gets there. It was a buy a year ago, it was a buy 6 months ago, and it's a buy now. Hey, Steve, can you help me out with the bottom line?
And that's the bottom line.
That's right, because Stone Cold said so. Thanks, man. Let me know what you think about Tesla's current valuation, though. Is it overvalued? Is it right where it should be? Or do you think this goes higher the closer we get to Battery Day? Let me know in the comments below as we move on to what's going on with big tech. As I speak and record this video, big tech CEOs such as Amazon's Jeff Bezos, Apple's Tim Cook, Facebook's Mark Zuckerberg, and Google parent Alphabet Sundar Pichai will appear before the House Judiciary Committee to discuss a number of concerns over their market power and business practices, some of which have been scrutinized for antitrust issues. Many have argued that these issues have been exacerbated by the pandemic, which has wiped out other competitors and pushed businesses further toward already strong major tech companies. These FANG stocks, among other tech giants like Microsoft, have thrived in these insane economic times and done so better than many had feared, with Amazon in particular becoming a huge beneficiary of this current lockdown. Amazon alone is up nearly 100% from its lows back in March. A big part of this investigation, though, has focused on Google's online advertising, with the Justice Department focusing more broadly on concerns that Google uses its dominant search business to crush its competition. Apple's not getting out of this either, as there's scrutiny on their App Store's 30% fee and the dominance in both the US and especially in the EU. Tim Cook is expected to get his interrogation later this week, and to me, to think that this impacts the value of these stocks is bullshit. Of course, Amazon has been crushing it. E-commerce has been booming, and Amazon hasn't been the only benefactor. Have you seen Shopify's earnings today? They really seem to be hurting over there, don't they? We've spoken before about how Etsy, another e-commerce company, has nearly tripled storefronts since the beginning of the year. This surge in e-commerce has increased demand for digital advertising across the board, which is where Facebook, Google, and other ad-dependent sites benefit. It doesn't take a genius to figure this stuff out. But then you have stories such as Bill Gates going on mainstream media outlets to show flaws in all social media platforms, which was based on a video that made false claims about the Rona, received tens of millions of views and amplification from President Trump when it went viral on Monday until Facebook and Twitter removed it from their platforms. The video reached more than 20 million Facebook users before the company removed it. YouTube has also removed this video from its platform as well. Gates did acknowledge that the rapid spread of that video made it difficult for social media platforms to contain, but he also said that the incident illustrates a persistent shortcomings of the platforms. He said, in quote, their ability to stop things before they become widespread is something that they really need to improve on. Does this at all impact the value of these stocks? Not in my opinion. I see Facebook still reaching 350, Amazon hitting 4,000, and Apple seeing 450 by the end of the year, and it should all happen pretty easily. Do you think these companies should not have this much control? Does it do more harm than good to have the government control these companies even more? Let me know in the comments below, and if you're just starting out investing and trading in the stock market, click this playlist here, as it is a short list of videos that can really help you get started on the right foot. Or if you happen to miss out on my top stocks to trade this week, click this video here. Please like and subscribe, and as always, folks, I will see you all before the bell, and B. Smith is out.